What if the next global crash is not a matter of if, but when? In 1929, the markets collapsed under their own weight. In 1973, it was oil. In 2008, housing brought the world to its knees. Different triggers, same underlying pattern. Cheap credit, inflated assets, and a sudden snap in trust. Now in 2025, that pattern is back. The signs are familiar. Debt at record highs. Inflation baked into the system. And markets priced for perfection. Again. Each of the last collapses came after warnings were ignored. And right now, the same cycle is quietly loading. This is not a prediction. This is a pattern. And 2026 may be its next chapter. It always begins the same way. Confidence grows. Prices rise. People believe they have outsmarted risk. Then the cracks appear. Quiet at first, then undeniable. In 1929, Wall Street was on fire. Margin loans fueled a surge in speculation. Ordinary people borrowed money to buy stocks they barely understood. The market kept rising until it didn't. What followed was not a dip. It was a collapse. Banks failed. Fortunes vanished. Breadlines stretched for miles. And the myth of endless growth dissolved overnight. Fast forward to 1973. This time it was oil. A geopolitical shock sent prices soaring. Inflation exploded. Consumers pulled back. And the global economy sank into a strange new condition. Stagflation. High prices. No growth. No answers. Policymakers scrambled. Investors panicked. Another illusion broke. Then came 2008. Easy credit had once again flooded the system. Banks packaged risk into products no one fully understood. Housing became a casino. Subprime mortgages were sold as prime investments. And when the bubble burst, it spread through every corner of the global economy. 3 different decades, 3 different triggers. But beneath the surface, the pattern repeats. Overconfidence, leverage, fragility. Each time, the system looked unshakable. Each time, it broke in familiar ways. Not because of a single failure, but because too much was built on too little. Because too many believed the rules had changed. Because warnings were ignored. And history was forgotten. We call them black swans. But these were not random. They were consequences. The result of systems designed to chase short-term gain, while ignoring long-term risk. And now, with the next cycle loading, the same signs are appearing again. We've seen this movie before, but somehow we keep forgetting how it ends. Before every crash, there are signals. Not loud, not obvious, but unmistakable for those who look. In 1929, stocks were trading at absurd multiples. In 1973, oil prices surged long before the economy cracked. In 2008, real estate values detached from reality, yet were treated as collateral for the future. Every cycle had its bubble. Today, it is tech valuations. AI companies with no earnings priced like monopolies. Crypto assets backed by nothing but belief. Private equity buying everything in sight, with borrowed money and borrowed time. Yet the system keeps expanding, because policy reacts instead of prepares. Central banks flood the market with liquidity during the crisis, but they ignore the architecture that made the crisis inevitable. Debt has become the default setting. Governments spend beyond revenue. Corporations refinance endlessly. Households live on credit. And still, confidence remains high. The signals are not just numbers. They are patterns. Too much optimism. Too little margin for error. The idea that markets will always self-correct, even as they bend further from fundamentals. History offers no comfort. The same phrases return in every era. This time is different. It's just a correction. The fundamentals are strong, but history disagrees. Every major collapse began when multiple signals were ignored, when risk was layered, hidden, and normalized, and when no one wanted to say it out loud. That is how crises begin. Not with panic, but with silence. Not with chaos, but with comfort. The signs are not coming. They are already here. stacked, aligned, and waiting. What people ignored then is being ignored now. Every crisis begins with confidence, and right now, confidence is everywhere. Markets are up, credit flows easily, growth feels permanent. But beneath the surface, the system is stretched thin. Commercial real estate stands on a cliff. Office towers sit half empty, while loans tied to them still trade as if nothing has changed. Banks are exposed, but no one wants to recognize the losses. It is easier to pretend the rent checks are still coming. In the shadows, another risk grows. Private funds and unregulated lenders now move trillions beyond public oversight. This is the new shadow banking world, invisible, enormous, and untested under real pressure. One wrong move and the liquidity disappears overnight. Then there are the zombie corporations, companies that should have failed long ago but survive on cheap debt and refinancing. Their balance sheets are shells. Their lifeline is faith, and that faith is beginning to fade. Outside the markets, geopolitics has returned to center stage. Trade routes shift. Energy alliances fracture. Every major power is quietly preparing for instability, not growth. Oil, gas, and grain are no longer global commodities. They are instruments of leverage. And as technology accelerates, the markets themselves change character. Algorithms trade faster than thought. Artificial intelligence predicts movement before humans even react. But when fear spreads, machines amplify it. There is no circuit breaker for panic coded into the system. Meanwhile, governments borrow, like collapse is impossible. Debt ceilings rise, currencies wobble. Policy is reactive, not preventive. If 2026 is the tipping point, the kindling is already dry. All it needs is a spark. The pattern is familiar. Confidence built on credit, stability built on denial. And once again, history waits for repetition. The future is not fragile because it is uncertain. It is fragile because we pretend it isn't. The signs are there, always. But the mind is wired to look away. In every cycle, people believe the good times are different, that the system is smarter now, that we have learned from the past. But the truth is simpler. We are not built to see slow-moving disasters. We are built to follow the herd. Herd behavior is not just instinct, it is survival. No one wants to be the first to step back while everyone else moves forward. So we stay in, we double down, and we call it confidence. Institutions do the same, because no one gets paid to be cautious. Fund managers who miss a rally get fired. Executives who speak of fragility lose investor trust. And politicians who speak of limits rarely win re-election. So the machine keeps moving, even when the brakes are gone. Central banks fall into reputational traps. They cannot raise rates fast enough. They cannot admit when the models are wrong. So they speak in code. They delay. They protect the myth of control. The media helps. It packages every uptick as recovery, every soft landing as proof the system works. But the system was never designed for permanence. It was designed for velocity. And then there is the phrase that echoes across decades. This time is different, spoken in boardrooms, in headlines, on trading floors, every time, without fail. It is not ignorance that drives repetition. It is choice. It is comfort. It is the belief that if collapse has not happened yet, it never will. History does not repeat because we do not know better. It repeats because we pretend not to. A historian once said, "History does not repeat, but it rhymes. And it rhymes in cycles. Every crash is seen as a surprise, but the structure is familiar. A period of excess, a moment of shock, and then a reckoning. The question is not why collapse happens. It is why we keep building systems that collapse in the same way. What if the economy is not broken by accident? What if it is built on assumptions that only work when nothing goes wrong? Endless growth, cheap credit, confidence as collateral. When the music stops, wealth does not disappear. It moves. From those who believed too late to those who saw it coming. Every crisis is a transfer, a migration of power from the many to the few. and the pattern holds again and again. But in every era, there were people who saw the signs, who stepped aside before the fall, who understood that silence in the market is not stability, it is compression, waiting to release. Most did not listen. Most never do. But that does not have to be you. This time is not different. But what you do with that knowledge can be, because the system may not be crash-proof, but your perspective can be. The future will not warn you in headlines. It will whisper in patterns. And if you are listening, you are already ahead of the story. If this gave you a new perspective, do not just scroll away. Hit subscribe. This is Economic Chronicles, where history exposes the present and the future is written in the lessons we refuse to learn.